Hello, my name is Hendi Susanto. I'm an analyst and a portfolio manager at Gabelli Funds. I joined Gabelli as a research analyst in 2007. I specialize in technology, covering microcap companies and all the way to mega-cap companies.
Do you want to talk about some of the mutual funds that you cover?
Sure. Let me describe some mutual funds that I'm part of. The first one is the closed-end Gabelli Dividend and Income Trust, whose objective is to generate a high level of total return and invest at least 80% of its assets in dividend-paying or other income-producing securities. The second one is like closed-end Gabelli Equity Trust, whose objective is to produce long-term growth of capital with income as a secondary objective. The third one is closed-end Gabelli Global Utility and Income Trust, which aims at least 80% of its assets in equity securities and income-producing securities in the utilities industry and other industries that are expected to pay dividends periodically. The fourth one, open-end Gabelli Global Mini-Mites Fund, invests primarily in microcap companies that have market capitalization of up to $250 million at the time of investment. I also manage a technology and ESG-focused hedge fund and multiple institutional and individual accounts.
So, what are some companies that you follow?
First, Sony. Sony operates the world's largest integrated gaming platform with its PlayStation consoles. Video games have multiple growth catalysts, including virtual reality, esports, advanced graphics, and faster speed supported by 5G, higher network speed, and cloud gaming. In music, Sony commands number one in music publishing and number two in music recording. The fast-growing music streaming business is benefiting music industry as a whole and Sony. Sony Pictures is one of the only 5 U.S. major studios with a significant content library. In semiconductors, Sony is the number one image sensor leader with over 50% global revenue share. Sony supplies image sensors for high-end smartphones, and the company is working on image sensor for the automotive industry, where one autonomous driving unit may eventually employ up to 30 camera sensors each. During COVID-19 pandemic, Sony demonstrated strength of its diverse portfolio and solid free cash flow. The second company that I would like to talk about is Arista Network. In digital infrastructure, there are 4 major building blocks of technology infrastructure: computing, storage, networking, and software. We believe the most interesting block is networking, where things get faster and increasingly more complex. Networking has multiple long-term growth drivers, including cloud, cybersecurity, mobility, AI, IoT, 5G, transition from 100 gig to 400 gig Ethernet speed, and the new Wi-Fi 6 standards. Arista Network is the market leader in cloud networking platform. The company empowers large-scale cloud, data center, and internet companies, service providers, and enterprises. Arista Networks has competitive advantages including cloud-based architecture, software-driven networking that enables automation and ability to utilize lower-cost components. Its core business is high-speed data center switching market, where the company has been winning market shares versus Cisco. So it's like a story of David versus Goliath. Beyond that, Arista Network continues to expand its addressable market with multiple avenues of growth opportunities, including routing, campus networking, upcoming 400 gig deployment, and investment to expand in enterprise, service providers, and international markets. The third company that I would like to talk about is Dell Technologies. It's a financial engineering story between Dell and VMware. Dell Technologies is the largest provider of IT infrastructure hardware. It is undergoing a financial engineering. Dell Technologies owns 81% of VMware's share. VMware is a market leader in software-defined data center and provides core building blocks for data center infrastructure. Dell Technologies is planning to do a tax-free spin-off of VMware in early November 2021. As part of the transaction, VMware will issue a special dividend to its shareholders, including Dell as its majority owner. Dell will use the special dividend to significantly reduce its debt and achieve investment-grade ratings. Post the spin-off of VMware, Dell will have a new share repurchase authorization of up to $5 billion, an allocation of $1 billion for its annual dividend. Dell Technologies is well positioned to continue to capitalize on digital transformation. The fourth company that I would like to talk about is Corning. Corning is a diversified market leader with attractive secular growth opportunities. Corning is the number one market leader in display glass production. We see multiple positive catalysts. Demand for large-size TVs continue to grow. Digital transformation drives more personal electronics and electronic displays. The average number of personal electronics for household have climbed up. Corning shall benefit from a new favorable price increase, a price increase that has not happened for more than a decade. Display market is anticipating tight demand and supply balance. Corning also has optical communications, which is the company's growth business. It is an industry leader that provides end-to-end optical solution, more speed, more connectivity, more network capacity, more cloud infrastructure, more Corning's optical fiber. We see multiple growth drivers including fiber to the home, 5G, and hyperscale data centers. 5G requires network densification. Market research estimates that 5G requires 100 times more fiber. Corning Life Science sells products for diagnostics, bioproduction, and lab research markets. One product highlight is Corning Valor glass vials for hundreds of millions of COVID-19 vaccine doses. Corning's stronger glass products can help increase output, and it should benefit from robust growth in drug discovery and medical innovation. Corning Specialty Materials segment produces premium cover materials known as Gorilla Glass and ceramic shield for high-end smartphones, including Apple iPhone. Gorilla Glass is lighter and stronger. Corning Specialty Materials also makes semiconductor-related optical glasses for electron ultraviolet (EUV), which is at the forefront of the most advanced semiconductor production. Corning is also championing market adoption of its lighter and stronger specialty glasses in automotive. Corning also has environmental technologies business, which develops and sells gas particulate filter products. Its filter enables vehicles to lower particulate emissions and meet new air quality standards as regulatory limits tighten. In other words, Corning's filter helps make cleaner air. The market opportunities include heavy-duty diesels and hybrid vehicles. In sum, Corning offers market leadership, growth, resilience, and diversified innovation across technology, telecommunication services, healthcare, industrial, and automotive.
All right, now let's talk about major investment trends in technology. Can you talk a bit about cybersecurity?
Cybersecurity is pervasive. More digitization, more complexity, and faster speeds. All this leads to more investment for cybersecurity. Cybersecurity continues to evolve. One company that I cover, Mandiant, is investing significantly in threat intelligence, security automation, and security validation. It addresses several questions. How do companies solve thousands of security alerts being thrown at them on a daily basis? How do they prioritize among those alerts? How do companies deal with an unknown threat? The increasing complexity and the lack of resources drive companies to implement more automation. Companies and board members prioritize investment in cybersecurity, yet it is often that they don't know exactly and have no measure on how strong their cybersecurity applications are against real growing threats out there.
And in the same vein, how about ransomware?
We are seeing the growth of ransomware and cyber attacks. Cyber attacks are unfair games. Oftentimes, nation and state-sponsored actors attack small, medium businesses that have limited resources. Cyber attacks often run based on automation. A potential victim may have to battle against thousands or even tens of thousands of attacks coming in within a short period of time. And this type of attack can go non-stop for several days. Imagine how hard it is. The cost of cyber incidents continue to grow as well. Ransomware is one of them. Companies can lose hundreds or millions of dollars in ransomware. Therefore, that incentivizes companies to prioritize spending in cybersecurity. Enterprises will favor investing in cybersecurity against potentially losing a lot in a data breach.
And what about the overall increase in electronic contents?
Automotive, industrial IoT, and electronic devices in general are becoming smarter and power efficient. Electronic contents are becoming larger parts of bill of materials. We are seeing dollars contents of electronics, for example in a car, growing from hundreds of dollars into thousands of dollars. Electronic contents perform multiple features, for example, data repository for analytics, connectivity for real-time control and communication, power management to save electricity, and intelligence at the edge to automate decisions. Smart homes, smart devices, autonomous driving vehicles. Electronic contents perform multiple features. For example, data repository for analytics, connectivity for real-time control and communication, power management to save electricity, and intelligence at the edge to automate decisions. Smart homes, smart devices, autonomous driving vehicles, smart infrastructure, and smart cities are here today. We shall see more factory automation and robots. In electronics, we also think about replacement cycles. For example, PC replacement cycles are shorter in notebook computers versus desktop computers. A shift toward more notebook computers driven by hybrid or remote work will benefit PC manufacturers as they carry shorter replacement cycles.
And what about recent supply chain shortages?
Currently, there is a supply shortage of semiconductor components. Semiconductor companies have reported that they have been operating at supply-constrained environment and their internal inventories are below their targets. Intel stated that it takes about 9 months to add a new semiconductor production capacity. I believe that represents a best-case scenario inside a factory and that requires a lot of efforts, including running a parallel R&D and qualification and perfectly aligning semiconductor equipment orders months ahead. Major steps in semiconductor production include fab, assembly, test, and packaging. All these steps can be done across continents across the globe, so it's a very complex global supply chains. Companies have said that the supply chain shortage may last through 2022 or even 2023. So we shall see how things are going to recover in the supply chain world.
And what will the roadmap of component shortage recovery look like?
First, interdependencies on various components may limit supply production. Second, semiconductor manufacturing will operate at high utilization, which means gross margin will be more favorable in the absence of higher logistics and labor costs. Third, semiconductor companies will still need to maintain high manufacturing rates until they have enough inventories internally. Lastly, companies in general may want to increase their inventories on hand and diversify their supplies further across various geographies. A switch from just-in-time to just-in-case like what Dell Technologies have said recently.
Switching gears, can you share one major investment advice when it comes to investing in technology?
I usually advise investors to think more about time in general. In technology, it is true that nowadays you can implement software upgrades globally in seconds. Programmable software can incorporate changes instantly. Information is delivered in almost real time. On the other hand, it takes time to change the course of operational execution or develop new products. For example, new Salesforce generally takes 6 to 9 months to ramp up into full productivity. That means poor executions of sales incentives and sales organization may result in low productivity for multiple quarters. Pre-sales activities of software or hardware may take 3 to 12 months. Software deals don't happen overnight. In software, the larger the scope of a deal, the more time it takes. Larger software implementation usually proceeds gradually across locations across the globe. For example, a company that implements large ERP software may choose which locations they want to proceed first and then save some location later. In hardware, sales of newly introduced 3D printers in fall may not see meaningful sales until spring, summer, or fall of next year. Design wins of electronic components in automotive means the component will start to become part of a car in 2 to 3 years down the road, and that will last for 5 to 7 years after introduction. That illustrates how sticky a component can be in an automotive environment. In semiconductor, we are seeing Intel's falling behind in its manufacturing technology progress, and it may take 3 or more years for Intel to catch up with Samsung and TSMC. In short, patience is a virtue, and time consideration should play a role in evaluating your investment decisions.
Lastly, what is your view on ESG investing in technology?
I strongly believe technology companies are at the forefront of ESG. Let's talk about semiconductor space, for example. At its Capital Market Day event earlier this week, Infineon, one major semiconductor company, pointed out that the secular theme of electrification deals with carbon dioxide saving, energy efficiency, and cost saving. Semiconductor chips continue to innovate. Power management products continue to eliminate energy waste. Semiconductor designs often integrate and eliminate various multiple components and reduce its footprint. Technology companies generally can help generate cleaner air and less waste. Electronic companies and semiconductor processes are increasingly use recycled materials, such as recycled plastics and water. Electric vehicles can reduce oil consumption and air pollution. I also want to point out that the roles of digital transformation during the current COVID pandemic, including remote education and hybrid work, are priceless. Many companies have stated that hybrid work is here to stay. Digital transformation enables creation of many small businesses in different societies, both in developed and developing countries. People can start small businesses utilizing e-commerce platform now. Having brick and mortar stores is no longer a prerequisite. People can also collaborate across distance and countries, essentially helping global economic growth, and digital transformation help bridge the inequity gap in societies. Kids can learn so many valuable things delivered through internet. On the infrastructure side, cloud computing minimizes investment in IT infrastructure and optimizes workload and capital spending. Instead of individual computers operating at minimal capacity, software allows virtualization and cloud computing that results in fewer hardware and significantly higher utilization rates. Cybersecurity is also playing a major role in protecting enterprises, intellectual properties, major infrastructure, and nations against dark adversaries. Lastly, artificial intelligence is still in the early innings. We can only speculate how much innovation AI can deliver in various spaces, including breakthrough medical innovation.
Well, thanks for coming on, Hendi, and I hope that you can return soon.
Thank you, Tommy.
Following today's discussion, I must read the following disclosures. Equity investments are affected by market conditions. The intrinsic value of the stocks in which our portfolios invest may never be recognized by the broader market. The opinions expressed are current as of October 7th, 2021, but are subject to change. The information provided in this podcast does not provide information reasonably sufficient upon which to base an investment decision. It should not be considered a recommendation to purchase or sell any particular security. Portfolio holdings are subject to change. The performance of any single portfolio holding is no indication of the performance of other portfolio holdings of any strategy or fund. Comments made on any individual company or stock is not an indication that it is currently held in a portfolio, nor is it an indication that it will ever be held in a portfolio. Several companies were mentioned in this episode. We own less than 1% of the following: Sony, ticker SONY, Arista Networks, ticker ANET, Cisco, ticker CSCO, Dell, ticker DELL, VMware, ticker VMW, Corning, ticker GLW, Apple, ticker AAPL, Mandiant, ticker MNDT, Intel, ticker INTC, Samsung, ticker SMSN, Taiwan Semiconductor Manufacturing Company, ticker TSM, and Infineon Technologies, IFX on the Frankfurt Stock Exchange.